Bringing now Thomas Savage, an economist with the American Institute for Economic Research. Also, Brandon Arnold is Executive Vice President at the National Taxpayers Union. Gentlemen, thank you both for coming on. Obviously, this is quite the day, right? We're looking at futures right now. The Dow is down almost 2.6%, around 1,000 points. NASDAQ futures are also down about 500 points as well. It's been volatile in the markets. Economists blame it on the tariffs, and now this seemingly is consistent. But you see the fear in the markets right now. So, Thomas, I'll throw that one at you if you can. And just what you're seeing, maybe reading the tea leaves from your end.
Absolutely, Sean. The key word with these tariffs is uncertainty. The one thing that hasn't been popularized yet, hasn't really been talked about, is that yesterday, in addition to these tariffs, the White House released a 22-page long list of exemptions that you now have to go through, and it's saying goods compliant with this subsection or that subsection or with this particular trade deal. And so now folks have to comb through these trade regulations and see, is my business going to be part of the exemption, or are they going to be facing the tariffs?
Yeah, uncertainty. That's the key word. You're right about that. Brandon, I'll bring you back in. As we take a live look here at the New York Stock Exchange opening bell here in the States, just about a couple minutes away. Will the futures be accurate on this? Again, we're just a couple minutes from finding out. The Dow did close down almost 1,700 points, 4%. Yesterday, so that was a rough one. Brandon, as you know, I can't help but to ask again about China now and imposing their 34% tariffs on U.S. imports. Can you talk to us about that? And really their statement, they take it a little further, and they want to talk to the World Trade Organization, if you will, about this very topic of changing tariffs, the amounts. Your thoughts there?
Yeah, I mean, that's a huge announcement. Massive tariffs in place in retaliation to the United States. Tariffs, 34%. This really hits our agricultural community very hard. We export billions of dollars of soy and other products to China. So this is going to hit farmers really, really hard. And of course, Secretary Rollins at the Department of Agriculture is already talking about a farmer bailout. We had to bail out farmers to the tune of about $30 billion when we had our last major round of tariffs. I think this bailout will have to be significantly larger than that to cushion this blow. And unfortunately, this is probably the start of a series of retaliatory tariffs. We know that France is already trying to team up with other countries to hit the United States as hard as it can in response to these tariffs. So we're going to be really scrambling to respond to them to make sure that our farmers, our businesses, our manufacturers aren't hammered by high retaliatory tariffs.
Yeah, that's the big question that I was trying to get at, Thomas, is who will be impacted by this the most and when? Treasury Secretary Scott Bessent saying in a statement, quote, "My advice to every country right now is do not retaliate. Sit back, take it in, let's see how it goes, because if you retaliate, there will be escalation." But as we were talking, China saying that it is imposing tariffs of 34% on all U.S. goods. This starts on April 10th. So, Thomas, I'd like to get your thought on that.
Well, unfortunately, this is really going to hit the average person, whether it's the average American, the average person in China, the average person in Europe. Their goods, cost of living is going to go up. And after 4 years of record-breaking inflation and uncertainty there, I'm not sure how much more uncertainty and more rise in the cost of living people can take.
Included, there's the opening bell there, watching for the markets, but included in Trump's tariff plans, I'm just looking this over, auto tariffs on foreign cars and car parts coming into the United States. Brandon, Canadian Prime Minister Mark Carney had this to say in response. Watch this.
The government of Canada will be responding by matching the U.S. approach, with 25% tariffs on all vehicles imported from the United States that are not compliant with CUSMA, our North American Free Trade Agreement.
Okay, so now you're seeing the country step up, Brandon, but taking a step back just for a second, you had to assume that this administration, that the president's advisors, that the Treasury Secretary, they must have known that these other countries would retaliate in their own way, and they would be prepared for that, Brandon.
Yeah, you certainly hope so. I think the Department of Agriculture, as I mentioned earlier, was expecting this. But I think the problem is we don't know exactly how folks are going to retaliate. Some will retaliate with tariffs, as we've already seen, but I think it's going to go beyond tariffs. China has already announced that it's going to blacklist a number of American companies. And then I think we're going to see Europe and other countries continue to go after our tech companies, other large American businesses in ways that don't necessarily involve tariffs, but just going after them with punitive actions of a variety of degrees. So it could get pretty ugly here. I'm hopeful that we can find an off-ramp, start to negotiate, cut deals to lower these tariffs, because otherwise we're going to experience a considerable amount of pain here in the United States.
Yeah, and I wanted to shift, if I can, Thomas, to that. Let's paint the other side of this picture, if we will. Obviously, we talked a lot about the negative impacts that we could potentially see in the short term. But in the long term, President Trump is trying to put America first, and he really is trying to change or do something that hasn't been done in decades, that no president was able to do, to balance trades, to balance tariffs out, perhaps negotiate and get things down, or, again, get more money to bring down the deficit for this nation. Can you talk to that, Thomas? Again, this administration's approach to the long game.
And for one thing, it's one thing to want to bring down federal deficits, but I kind of want to push back on the administration's strategy. If you want to reduce trade deficits, if you want to reduce federal deficits, cut spending. We have trade deficits in part because we are a wealthy country. We have our investments in the United States are still a great return on investment, but we're also seeking that because we have massive amounts of debt, we have massive deficits, and we want people to buy our debt to finance this deficit spending. If we really want to reduce those trade deficits, cut our spending, reduce the size of government, get government out of the way, make America a place to invest in easily, of course, without any sort of national security concerns. You always want to be concerned about those. But inevitably, you've got to get rid of that waste, fraud, and abuse. So trade policy should fall in line with what DOGE is doing right now, not increasing government, decreasing government.
Sure, and obviously we know, all of us here on this panel, we know that the spending came from the previous administration. This administration has only been in office less than 100 days, 75 days. So obviously a long way to go with that. President Trump did put out a Truth Social this morning, and he says this: to the many investors coming into the United States and investing massive amounts of money, my policies will never change. This is a great time to get rich, richer than ever before. And as we look at the stock market, the Dow finally fell below 40,000 points. That hasn't happened in a bit. It's down about 1,000 points right now. But he's encouraging, obviously, investors to get in and to get involved. But I would go, Brandon, to this point is that the markets aren't exactly the full-on economic indicator, right? We had some good news today that the March jobs report was 228,000 jobs added. Economists didn't expect that. They expected about 100,000 less. And not everyone has their money tied up in the markets. So we do have a little bit of good news to go on there. Again, the job report, even though unemployment ticked up just a hair, March jobs added 228,000. Just your reaction to that. And again, because this ties to tariffs, building plants, and adding manufacturing jobs. Your thoughts on that?
Yeah, I mean, we did get a bit of good news. Added jobs, always a positive thing here. And incidentally, fewer government jobs, also a good thing there. So we're moving in the right direction there. I'm a little bit worried about how this would be impacted by tariffs in the next jobs report. But if we rewind back to the first Trump administration, yes, we had some tariffs, but we also had trade deals, a revised NAFTA deal, the USMCA. And guess what? We had a great economy. We had low unemployment. We had strong job growth. We had low inflation, all the things that we want to see. And we didn't have a massive trade war. So I think getting back to what President Trump did right in his first term, moving away from this massive trade war that is obviously not doing well in markets and will soon, I think, start to slow the amount of investment that we see in the United States. I think that secret sauce, he discovered that in the first term. We need to go back to what we did then. Deregulation, lower taxes. Those are the good policies that will really jumpstart the economy.
All right. A long day ahead on the trading floor there. Thomas Savage, Brandon Arnold. Thank you both. Enjoy the weekend.
You too. Thank you.
Thanks, guys.